Atlanta Federal Reserve Chief Raphael Bostic says he expects one rate hike in 2019 and another in 2020. His remarks come just before Fed Chair Jay Powell will testify before the Senate Banking Committee. In fact, that's tomorrow. He will testify before the House Finance Committee Wednesday. Let's talk more about the Fed and the markets with Bryce Doty, the portfolio manager at Sit Fixed Income. Thank you for being here. What are you going to be looking for when Jay Powell speaks before Senate Banking tomorrow? Any surprises? You don't expect him to say, let's raise rates twice.
Right. You know, you're going to really need to focus on what he's saying about the economy. And, he's probably going to say that things are soft, but he has to kind of thread the needle. If he sounds pretty optimistic about the economy, people are going to get nervous that maybe they are back on for a possible rate hike, and we know he doesn't want to do that. But if he sounds like there's some real problems with the economy, then that's an issue as well. So I think, like what Christian has said, that the market is so believes that there's no chance the Fed is going to raise rates, that any hint of anything about the economy being strong or the labor market being too tight, or God forbid there's even a little sliver of inflation out there, and stocks can take a hit because they don't want to hear anything that would indicate that the Fed's going to raise rates anytime soon.
Yeah, there's a certain fragility, to use the president's word, about the oil markets this morning in the equity market right now when it comes to rates. What about the balance sheet as well? I'm curious your take on how he perhaps needs to thread the needle on that topic.
Yeah, well, that's really complicated because the real fireworks could be Wednesday when he's testifying to the House. There you have to contend with Maxine Waters now being the head of the House Financial Committee, who's going to be running the questioning there. And she's no fan of banks, yet you have Fed policy paying 2.4% interest on $1.6 trillion worth of dead money or excess reserves at the banks. This amounts to a subsidy of about $35 billion to banks. So, Maggie Waters is no fan of banks, thinks that they're a big reason the crisis happened in the first place. So Powell's going to have to explain why he's doing this reverse Robin Hood type of thing, using effectively taxpayer money to give to big banks, which it amounts to 15 to 20% of 2019's profits. Well, the only way that they can really effectively get those excess reserves down is to reduce the balance sheet. But they're paying themselves into a corner now. They're saying, hey, we're not going to reduce the balance sheet this much. So something has to give. Either they have to reduce the rate they're paying on those excess reserves or find another way to get rid of them other than balance sheet reduction. So this is a more complex issue that is not really very well understood. So we're thinking of just making popcorn and watching the fireworks on Wednesday in the trading room.
Bryce, as we near the debt ceiling deadline, are you expecting a spike in the 10-year?
It's odd. If it looks like we're not going to raise the debt ceiling, yields go down. It's a bizarre flight to quality. It's like what happened when we got downgraded. You would have thought yields would spike, as a default risk. That normally is common sense, that's what happens. And yet we see this panic mode. So rather than 10-year yields go up, we might see stocks go down, a flight to quality into treasuries. It's just backwards. It's very counterintuitive.
I think the balance sheet issue is an interesting one because, as Bill Dudley said, we focus way too much on the balance sheet. The reason the balance sheet was created was to facilitate certain things. At the end of the day, what matters is Fed policy. And all they are doing is making the balance sheet operations kind of in the same direction as their policy. So while they're saying that rates are not going to rise, kind of continuing to unwind the balance sheet doesn't really help. And I think at some point they will basically stop. We will have a significantly higher level of balance sheet in perpetuity. I think that's how things are going to be.
All right. Thank you. And thank you to Bryce Doty. Hope you enjoy your popcorn tomorrow. Sit Fixed Income Portfolio Manager. And just a quick programming note. Tomorrow, Adam's going to have special coverage of the Federal Reserve Chairman Jay Powell's testimony before the Senate Banking Committee. Get your popcorn, get your coffee, live from Capitol Hill. That's where Adam will be beginning at 10 a.m. Eastern.